Hello and welcome back to Demystified Small Business Taxes in Washington State. My name is Wallace. I'm with Arbor Vitae Financial Services. This video is a correction to the previously recorded version of this video. So there are a couple reasons I'm doing this for you guys again. Number one is I found a mistake in the information that I presented before. And the second reason is the audio was really terrible. So I hope that you enjoy this audio a little bit more. Let's dive in and go over this information again. This is for you if you run a small business in Washington State that is structured as a pass-through entity. That means it's a sole proprietorship or an LLC. I'm not a tax professional. This information that I'm sharing with you is based on my experience. It's not legal advice. It's not tax advice. This video is for entertainment purposes only. So let's look at the big picture. As a small business owner, you pay taxes to both the state and the feds. And normally when tax information is shared with small business owners, people either talk about the state taxes or the federal taxes, and they don't go into how they relate to each other and overlap. I want to give you a complete picture of all the taxes you will pay as a small business owner running an LLC in Washington State. Hopefully, this information will help you understand your tax obligations clearly and help you set aside enough money to comfortably pay your taxes on time to both the state and the feds. So, who is the state? That's the Washington State Department of Revenue. They're called the DOR for short, and they know you by your UBI number, your Unified Business Identification Number. You would have received that number when you registered with the Secretary of State, and then you use that number when you register with the Department of Revenue. What do they want from you? They want business and operations tax. That's what Washington has instead of state income tax. And then they want sales tax as well. And we're going to break those down in detail later on. Now, who are the feds? That's the IRS, and they know you by your EIN number. You have to apply directly to the IRS to be issued an EIN number. What do they want from you? They want income tax and they want self-employment tax. You're probably already familiar with income tax. That's the variable percentage of your taxable income based on your tax bracket. Self-employment tax is a little different. When you work for somebody else, they withhold taxes from your paycheck to pay for Social Security and Medicare. When you don't work for somebody else, the self-employment tax goes to fund those same programs. So let's take a closer look at each tax. We're going to do Washington State Business and Operations, Washington State Sales Tax, and then federal income tax and federal self-employment tax. So Washington State Business and Operations tax is on gross income. So that's your income and you don't deduct your expenses from it. You just take all the income that comes in and then a certain percentage of that is your B&O tax liability. And it's based on what your business does. Retail, wholesale, manufacturing, and services are the different classifications. And I've listed out the percentages here. You have to take that percentage of every sale you make and set that aside. Now, Washington State sales tax, also called sales and use tax, is paid by buyers who are inside Washington at the time they make a purchase. The business or the seller simply collects it and returns it to the DOR. Now, sales tax is a percentage of the selling price of the product, but sales tax is not paid on services. So the percentage of the product price is based on the location of the sale. State, county, and city all want a slice of the pie. You add their rates together to get the local combined sales tax rate. And the DOR provides a really wonderful app. It's the Washington State Tax Rate Lookup app. It's free and very easy to use to help you figure out exactly how much sales tax you need to collect from your customer when selling them a product at a specific location. Okay, let's move on to federal income tax. When you hear that an LLC is a pass-through entity, this is where that's relevant. The LLC's profit passes through to you as an individual, and it's combined with your other sources of income. The total amount then determines your tax bracket. For example, if you have 5 LLCs and 1 full-time job, the profits from each LLC are added to your W-2 wages, and the total number determines your tax bracket. Note that federal income tax is calculated based on your business profits. So this is unlike Washington state business and operations tax, where the tax is a percentage of your gross revenue. That's your income before your business expenses. Federal income tax is based on business profits, which is business income minus business expenses. Then there's federal self-employment tax. This tax is also paid on your profit. However, it's only paid on the profit from the self-employment. You don't pay self-employment tax on any W-2 wages because Social Security and Medicare have already been withheld from that. Federal self-employment tax is a flat percentage of your net income, no matter how much money your business makes. And right now it's 15.3%. Let's imagine you only have self-employment income in a given tax year. Your business is doing really well. That's the amount of income that determines your tax bracket for federal income tax. You still need to pay federal self-employment tax on the same money. So you must add 15.3% to whatever percentage you end up with based on your tax bracket. Let's look at an example because this is really confusing for new business owners, myself included. Example, you have one LLC with $150,000 in profits. Therefore, your total income for that year is $150,000. So you fall into the 24% tax bracket. And these are based on 2023 brackets, by the way. You take 24% plus 15.3% is 39.3%. That's correct. This is a huge deal for small businesses because you have to save 40% of everything you make. You have to save 40% of $150,000 to pay your federal income taxes. Now let's talk about deductions. The word deduction is used to mean two completely different things. And when people are using the word deduction, they're usually talking about one or the other, but they don't specify which one they mean. So you take deductions on your Form 1040 that are itemized, or you take the standard deduction. Most people know all about that. But then as a separate issue, on your Schedule C, you deduct business expenses from business income to get business profits. And those are called deductible business expenses. Not all business expenses are deductible, and owners can get in trouble with the IRS by deducting expenses that are not, in fact, deductible. You can hear my dog. I hope you guys don't mind the background noise. Let's work through an example that shows all the taxes playing together in a given year for an example entrepreneur. If you watch the first version of this video, this will seem a little bit different. I made the mistake in this section, so this is where I made the changes. Services don't get charged sales tax. So now she has a coffee bean business and she sold coffee beans. Almost all of the numbers are the same. So Angela has a part-time job where she made $32,000. Her coffee business made 2 sales. The first sale was $45,000 to a client in Tacoma, and her second sale, $88,000 to a client in Everett. Her business expenses for the year were only $5,400. And you may be wondering how a coffee business only had $5,400 in expenses. I know that doesn't make sense, but we're not going to worry about it because it's all made up anyway. So let's work through, first of all, what Angela owes to Washington State. For her business and operations tax, she's a wholesale coffee bean business, so she has to pay 0.484% of her gross revenue. You take her 2 sales, $45,570 and $88,970, add them up to get the total gross revenue for the year, which is $134,540, and you find 0.484% of that number. It works out to $651.32, and that is what Fresh Beans owes in business and operations taxes in 2023. Because the sales took place in quarter 2, the due date to pay the Department of Revenue is the end day of the month after the end of the quarter in which the sales took place. Quarter 2 is April, May, June, so the due date is July 31st. Now for Washington State sales tax. The first sale of $45,570 was to a client in Tacoma. The local tax rate is 10.3%. So 10.3% of that first sale is $4,693.71. The second sale was $88,970 to a client in Everett. The local tax rate in Everett is 9.9%. So the sales tax amount on that sale was $8,808.03. Add that together, you get $13,501.74, also due on July 31st. Now, Angela owes that to the Washington State Department of Revenue, whether she collected it or not. So she's supposed to take those amounts. It's just like on a grocery store receipt. You have your item price and then your sales tax, and then at the end you pay the total. Well, the grocery store is just taking that money, holding on to it until the end of the quarter, and giving it right to the state. So if Angela didn't collect it in that same manner, she'd still have to pay it. She's still on the hook for this money, whether she collects it or not. And if she collects the wrong amount, she's on the hook for the correct amount later on. Okay, now let's work through what she owes the IRS. Angela had a part-time job in 2023 where she made $32,566 in W-2 wages. Then her LLC had gross revenue or total income of $134,540. And she also had $5,540 in business expenses. Gross revenue minus business expenses equals $129,000 in profits. So Angela's income for the year is her LLC profit plus her W-2 wages. The total then is $161,566. That puts her in the 24% tax bracket. She's allowed to take the standard deduction of $13,200, which gives her a total taxable income of $147,716. Now, this is something I don't actually know. Does the tax bracket get determined after the standard deduction or before the standard deduction? In this case, it doesn't make a difference because the 24% tax bracket is so large that it includes her annual income both before and after the standard deduction. But that's something I don't know the answer to. So if you know, please post it in the comments below. Now, for her federal self-employment tax, it's 15.3% of her LLC's profits. The profit was $129,000, so 15.3% of that is $19,737. Angela's combined federal tax obligation is that she owes 24% of $147,716, her total taxable income, plus she owes 15.3% of $129,000. That works out to $55,188.84. That is what Angela owes the IRS for 1 year in business. That's a huge number. And if she didn't have that money set aside in advance, she would be looking at a situation. I hope this video has helped you understand the taxes you must pay as a small business owner of a pass-through entity in Washington State. Please post questions and comments below, and thank you so much for watching.